Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, really excited for this interview because London Paul of the Sirius Report, who I first heard maybe a year or two ago and have been blown away by some of the information that he shares and some of the things he has access to. And fortunately, Paul is joining us on the show today to dig into Trump, the deep state, the gold markets, how this all ends. So, Paul, it's been great to get to know you recently and honored to have you on here today. How's everything going with you, my friend?
Well, first off, Chris, thanks very much for having me on. Much appreciated, and thanks for your support as well, because it's people like you that sort of raise my profile, and so additional people come to listen to what I talk about and discuss. And yes, I'm very well, and yourself?
I'm doing great. It's a nice sunny morning here in Denver. Certainly stunningly fascinating things happening in the world. And again, with your podcast, I wonder what the situation of the world would be like if everybody knew about all these things that you were sharing. So perhaps to dig in, as obviously I'm here in the US and I've seen President Trump really with some bizarre behavior. I mean, perhaps an odd guy to begin with, but certainly a lot of us thought when he came into office, we're feeling somewhat hopeful that, hey, maybe here's a guy that is not part of this deep state establishment. Lately seems a little different, but what is going on with Trump? Which side is he on? What is he really doing? Can you help break that down for folks?
Yeah, I mean, I'll sort of take this back. Prior to him announcing that he was going to stand to be president, I said at the time to people that it was my understanding Trump was going to stand for the presidency. And it sounds a little bit brutal, but the sort of nuts and bolts of it was, provided someone didn't kill him, he would make the US presidency. And there was big expectation that Trump was going to take the wrecking ball to the deep state. That was his sole objective. That was what he was really put in to do. And there was a lot of people banking on Trump making some major inroads in that regard. And certainly, I think that was self-evident from his presidential campaign, how he talked truthfully about US unemployment being 20-odd%, how the stock market was this giant bubble,
Yeah.
and he was very forthright. And of course, he won the US presidentials. He became, and after his inauguration, there was some optimism. He seemed as though he wanted to try and normalize relations, certainly with the Chinese. It was difficult for him to normalize relations with the Russians because of the very anti-Russian sentiment, and of course, ultimately, what became the whole Mueller investigation and the Russiagate debacle, which I think that is really what it turned out to be in the end. But of course, as his presidency wore on, we started to have concerns because he didn't fulfill any of his pre-election promises, particularly things like, we need a huge infrastructure rebuild, which the US needs really, so it could in the future become industrially competitive again. I'm not saying it's part of the Belt Road Initiative as the Chinese have, but certainly the US needed to be reindustrialized. Now, okay, we'll set the economics aside because clearly a strong US dollar isn't really sort of conducive to have that huge industrial base coming back, but that's a separate point. And then, of course, time kind of moved on further, and then for me, it started to becoming quite concerning because he was a sort of acting in a way that completely contradictory to his pre-election promises. He started to bring in a lot of the sort of neocon type figures such as Bolton, Pompeo.
Mm-hmm.
And then he started to sort of take a more aggressive tone. I mean, people can have their different viewpoints about the JCPOA, but the US walking away from it wasn't the answer. No, it wasn't a perfect agreement, but at least it kept the sort of status quo in the Middle East. It managed to keep a lid on a lot of the tensions there. And by walking away, effectively, he telegraphed to the rest of the world, well, we're not interested in maintaining agreements that are binding through UN Security Council resolutions. We can argue whether that holds any weight because so many nations don't, but that was one big problem. He sort of talked about Syria and wanting to bring the troops home, and then we had this very questionable chemical weapons attack that subsequently evidence has come out that proves that it was nothing to do with Assad, even though they tried to bury that information. And of course, Trump acted on that and launched a missile attack. So, and subsequently, we've seen very questionable behavior with regards to Venezuela and threats of regime change. It also includes nations like Nicaragua and Cuba. And then, of course, we had the Armada sailing out to Iran recently, and I wouldn't say exactly beating the war drums, but something akin to that. So clearly, somewhere along the line, something went wrong with Trump's sort of MO and what he was actually intending to do as president. Now, I don't think there's any question that he's a deep state operator, but I think for some reason he's become compromised, or for some reason or other, he's now had to toe the line. And we started to see some of his most fierce critics on the Republican side when he became president, who are now supportive of everything he's doing. And of course, consequently, he sort of went from initially meeting Xi Jinping, and now we see the situation where relations with China are at best fraught, but a lot worse than that. And this trade war benefits nobody. And trying to convince the American people that China's paying the tariffs and is frankly ridiculous, because everybody knows that's not the case. So he's kind of dug a hole for himself with regards to China, and I think he expected China would just roll over and concede. But some of the concessions the US wanted, for example, they wanted China to change a huge proportion of their laws just to accommodate the US in terms of a trade deal, which of course China was never going to entertain. So I think there's an interesting question with regards to, and something we talked about, is Trump escalating these trade wars to try and sort of cajole or stiff arm the Fed into cutting rates? Well, maybe I'll just stop there if you and let obviously you can interject at this point. And so I think there's a little story, well, it's quite a not too big a story, which we can run through, and why I come to the conclusion that that's not the case. But maybe I'll just stop there.
Well, actually, that was my last question. So by all means, dig on into that one, because I've been wondering that exact thing, where out of left field in the last month, escalating the Chinese trade war, now Mexico on and off with the trade war, India, new sanctions. And I have wondered, is this a plan to stiff arm the Fed into cutting rates? So what's your take on that?
Well, we'll take us a little, try not be too sort of convoluted on this, but if we go through a little bit of history, around March the 1st, the US hit the debt ceiling at 22 trillion, as we know. Mm-hmm. Now, of course, at that point, discretionary spending stops until the debt ceiling is raised, but mandatory spending carries on for like Medicare, Social Security, etc. So the total debt now is over 22 trillion. But then when I start to look at the sort of economic reality, let's set aside whether Trump's trying to strong arm anybody. The fact is that mandatory spending plus the interest on the debt is clearly greater than tax revenues. Mm-hmm. So what it's created is this balance of payments crisis. Now, if we sort of extrapolate what's happening within the next 2 months, maybe 2.5 months, the debt ceiling is going to need to be raised. And then they're going to have to set this budget for 2019, 2020. But the important question is, in all this, is who's going to buy US debt? Because we know for certain that foreign entities, despite the fact that they tried to say, oh, foreign entities are buying US treasuries, they're not. So what this is doing effectively is forcing commercial banks to increase their purchases of US treasuries. So their asset to reserve ratio, of course, is rising quite significantly. Essentially, they're leveraged up to the eyeballs. And there's something that came out from 2016 to the current day. Effectively, 100% of US treasuries are being bought domestically in reality. Now, what nobody, of course, wants to acknowledge is that foreigners are not willing, of course, or foreign entities to fund the US dollar, US Treasury complex.
Mm-hmm.
Now, the question, therefore, is what is the Fed going to do? Are they going to bring forward the date of QT from the end of September to now? Because they don't want to obviously add supply to an already stretched market. And that's debatable. I mean, there's talk they're going to bring QE back in the autumn, which I think is quite likely. But there's no indications at this point that that's absolutely going to happen. Now, of course, the other factor is in terms of the overnight funding markets, when the effective funds rate was trading above the IOER. Now, for anyone who's not sure, obviously, the effective federal funds rate is the interest rates banks charge each other for overnight loans to meet reserve requirements. And the IOER is the interest rate paid to banks for deposits they hold, obviously with the Federal Reserve, above those required by banking regulations. Now, obviously, the fact is when the EFF rate is trading above the IOR, that raises some serious concerns because in practice, at least since 2008, the EFFR rate or the EFFR was supposed to be bound by the rate the Fed pays on these excess reserves, the IOER. Now, the recent divergence has therefore created concerns that the Fed's losing control of interest rates, which of course is set via the Fed funds rate. So effectively what we're seeing is this implication that there's this dollar liquidity shortage signal that the Fed is unable to resolve. It also implies, from my perspective at least, that bank reserves are now significantly closer to what banks would consider the least comfortable level of reserves, and therefore banks are more willing to pay higher rates to retain those balances. But also I think what's telling is it implies that this $1 trillion plus in excess liquidity created by the Fed is insufficient for banks who now want to obtain additional liquidity, which of course is a serious concern for any banking system. So the question therefore is, what can the Fed do to regain control over interest rates? Well, they could either end the balance sheet runoff sooner rather than later. They could create a repo facility or conduct standard open market operations, therefore injecting even more liquidity into the system. Now, of course, setting aside all the statistics we see and the reality behind them, we then have to look at statements that were made. And we know that Trump's been saying, there's no inflation, but we need QE and we need to lower interest rates.
Right,
Mike
right.
Pence, of all people, came out stating there's no inflation in the economy, but the Fed should cut interest rates. And the Fed has also been saying, inflationary pressure is muted. So in a way, the Fed and the Trump administration are singing from the same hymn sheet in slightly different ways. And if we stack up all that I've just described, it's very convenient for the Fed in a way to now come back in, maybe say the autumn, and say, well, we're going to have to lower interest rates and we're going to have to start pumping QE into the economy. The fact that Trump has obviously indulged himself with all this these tariffs is an excuse in a way for the Fed to say, well, we have a legitimate reason for doing it. But when you look at what we've just discussed, which is a very small part of what's happened, that is the reality of why the Fed needs to lower interest rates and have QE again. But the fact that the Fed and the Trump administration have some sort of quasi-joined up thinking is not something we should be very happy in seeing. But I don't actually think that Trump's strong-arming them at all. I think it gives them an excuse because the reality is they're going to have to do it because there are suffering strains in the financial system. There is a lack of liquidity. And also it's quite clear that if you have QE and zero interest rate policy and you adopt it for more than several months, you're going to have major problems. And you can't address it. You can't raise interest rates. And obviously, having zero interest rate policy is just neither productive either for in the general economic sense of the word and in terms of fiscal policy. So therefore, they're caught between a rock and a hard place. So I think it's a kind of perverse marriage of convenience between the Fed and Trump, and in a way they're quite happy because it's given them an excuse to say, well, okay, well, this is what we're going to have to do. And I wouldn't say with any certainty, and the ECB and the Feds are never always in lockstep, and clearly they haven't been. The ECB are telegraphing QE in the autumn, and I think given the fact that the US is going to have to raise the debt ceiling, and there's clearly problems with in terms of budget deficits, etc., then QE is a very convenient vehicle for them to go, well, let's start pumping QE back into the economy, and it'll please Trump. Trump will be very happy. But really, it's a stay of execution, as we know.
Yeah, and I agree with what you said, how essentially in the end they all want the same thing, and perhaps it's just the theatrics that we get to watch, so one side can blame it on the other side can say we're independent, and but it certainly does seem like they're getting ready to head towards that way again. I noticed in the minutes from the Fed's May meeting, they already had a phrase called maturity extension program, which sounded a lot like QE. And I guess for the other gold and silver folks out there, which certainly I'm included, I know you talk a lot about gold and silver. One of the things that always made it easy for me to be comfortable with precious metals early on is that it seems like you have two primary outcomes. Either, you try and raise interest rates, normalize this, and we saw what happened last fall when the stock market was getting pummeled. The real estate market here has run into trouble. So, with all this debt that's out there that's held by the banks and all the derivatives that, it seems like if you really try to normalize rates, eventually you blow out the system. The alternative would be just essentially hyperinflating the currency, which I've always thought might be more likely and seems like we're headed that way. But I mean, is that a fair assessment that it's really two paths, neither of which are ideal for the current establishment as we know it, although in either outcome, both gold and silver would still be looking pretty good?
Yeah, I mean, I think any debt-ridden economy, debt-ridden, society is never going to cope well with interest rate rises. I mean, it's as simple as that. If you suddenly compound people's problems, okay, in terms of people saying having fixed-term mortgages, then that's a different matter. But a lot of debt isn't tied to that, and that's just consumer debt. I mean, we've got enormous debt bubbles in student loans. You've got auto debt. Mm-hmm. You have just credit card debt. The list goes on and on. Never mind then if we turn off the situation to the exposure of debt that banks have. And of course, you mentioned derivatives. And then there's, if you start tinkering with interest rates, what's it going to do to the enormous interest rate swap market? So the list goes on and on. So no, well, you're absolutely right. They can't handle that. But equally, if you try to hyperinflate your way out of debt, and yeah, it's great for gold and silver, but ultimately, the question therefore comes, if you have the world's reserve currency and you have to do that to the dollar, then all confidence will evaporate. Never mind, obviously, the fact that confidence is evaporating anyway, because despite many people's desire to think to the contrary, de-dollarization is happening in a very major way. It's just not actually becoming very obvious just yet to most people that's happening, but we know for certain that nations are trading bilaterally in non-dollar terms. I mean, only recently China and Russia have stated, in future we're going to trade everything in rubles and yuan. Well, that's at least $100 billion plus a year of trade. Mm-hmm. There are countless other examples of nations not trading in the petrodollar in terms of oil sales. I mean, Norway's one example that sells its oil in euros, and the list goes on and on. So in that sense, it all ultimately boils down to the fact that the US will lose the dollar as the world's reserve currency. The confidence will go. It will have to adopt a new dollar, which is going to be obviously significantly devalued. That has a huge amount of ramifications, not just for the US, but also what does that actually mean in a broader context. So no, there's no positive outcome ultimately for the Fed or fiscal policy, because I mean, if the worst comes to the worst, they could say, well, we'll just print 500 billion a month in QE. But in the end, everyone's going to turn around and say, well, this is just Zimbabwe on steroids. So we have no confidence in the dollar. And once the dollar's rejected, it's game over for them. So they're sort of thrashing around. And as I said, that's the problem you have. Because of the US economy is so indebted and the US financial system so indebted, they can't raise interest rates. I mean, they started to raise interest rates and it was creaking already. Imagine if they tried to normalize that. It wouldn't be possible. But equally, QE, low interest rates, you can't, it's not sustainable. So, yeah, well,
Right.
okay, we know US inflation is certainly at probably 10%. I would say, I suspect it's probably 10% in a lot of the European Union. Certainly in the UK, it's probably 10%, maybe higher. But if you try to hyperinflate, then obviously that's just going to destroy your currency as well. So either which way, how, there's no way out of this. But yes, certainly, if you're a believer in precious metals, which you and I are, then that's the way to preserve your wealth. And I've said this before, and many people, of course, will disagree. But the only way in the future you'll be able to preserve your wealth in certainly in the short term as we go through this transition phase is in precious metals. There's no other way. Yeah, you might be able to buy assets and you might be fortunate, but what assets do you buy? Because the risk is they're going to suffer some downward correction. People say about buying land. Well, maybe that's possible. But certainly, you know, there's people now getting out of fiat currency and buying real estate. Well, for me, that's completely flawed because we've seen in every financial crisis, real estate will get hammered.
Yeah.
And if what we expect will happen, we may get thing that happened in Japan where it's the late 80s where a lot of real estate fell 80%. Now, I'm not suggesting for any that is going to happen, but I don't see that as a viable option. But history has shown that, you know, that precious metals is the way to preserve your wealth and transition. And I think this neatly sort of comes into another point, which we will come on to shortly, which is the whole sort of China-Russia approach to the future and why they're doing what they're doing with respect to gold. And that's something we can talk about, you know, shortly.
Yeah, and I think you have a lot of great points there, especially with the real estate where, you know, if I had to take a choice between owning land or, you know, a big pile of dollars or Deutsche Bank derivatives, then yes, certainly the land has some tangible value. Although, I mean, I'm thinking most places in the country here in the U.S. we're already well in excess of the 2007 highs. So appreciate you pointing that out. And also, before getting into China, you were mentioning de-dollarization, which certainly happening in China. Curious how your perspective of how they might respond with the trade war. Although one thing you almost touched on a little bit that you've mentioned in your podcast, I was wondering if you could dig in again about the Saudis. You noticed in a prospectus that they already appear to be sending oil to China and trading oil in yuan?
Yes, it's buried in the Aramco prospectus. I can't remember because it's a 400 odd page document, but being quite sort of, I always like the detail. I think sometimes there's some hugely interesting things, and I kind of waded through it over a period of time, and I came across this sort of little nugget of information that effectively showed that on the sort of balance sheet was these reserves in yuan, which was higher than the pound and the yen. So I immediately thought, okay, what's the rationale behind this? Now I knew from discussions I've had with people that Saudi was selling some oil. I'm not saying all oil, but certainly selling some oil to the Chinese and the petro yuan, and this sort of solidified the viewpoint that in fact that was already happening. And I think there's some mileage behind my belief in this because there's certainly been a lot of effort to remove MBS, Mohammed bin Salman, who's obviously the king apparent. And I think a lot of this is to do with the fact that the West is extremely unhappy that he is, you know, moving eastwards. He's starting to develop strong relationships with the Russians and the Chinese, and obviously selling oil in the petro yuan. And who can recall the fact when MBS high-fived Putin? That was a very telling statement, and a lot of people didn't see the significance of that. But I think that's another indication of the fact that Saudi Arabia is still trying to. I mean, it's complicated. I'm not suggesting they've completely moved and rotated east, but I think they're certainly looking to do so. And that's why, yeah, without a doubt, to some level, we know China is obviously acquiring oil from the Saudis in petro-yuan and not the petrodollar.
Yeah, and speaking of China, I mean, there's some folks who think that China is really held hostage by this trade war. I seem to be in the minority on this one, where if, I mean, people say they don't want to dump the treasuries and lose that value. I would argue that it's already lost. It's money lent to an insolvent entity, and the sooner China, instead of exporting goods and services for IOUs, you could raise the living standard in China. What are your thoughts on what they're thinking at this point? I mean, they're being Mnuchin's on the verge. Doesn't come right out and call him a currency manipulator, but again, this idea that, I mean, they're sitting there antagonizing the largest creditor while the president and the Federal Reserve are getting ready to run the presses again. What must China be thinking as they watch all of this right now?
Right. Well, I think the first thing is, from China's perspective, they think the US is the biggest currency manipulator.
Yeah.
And they're not unique in that. Now, with regards to the trade war, look, at the end of the day, there are no real winners in any trade war.
Mm-hmm.
I mean, and let's not pretend China is going to be victorious or the US is going to be victorious. But what's self-evident already is exports from the US to China have decreased, I think 12%, and exports from China to the US have increased 24%. So in that context, the US isn't winning or succeeding. The other thing is that the US agricultural market is already suffering greatly. They've lost huge amounts of trade and business through relationships built over decades. Because the one thing China will do, and it's rather like Russia, when obviously we had the whole Ukraine Maidan, and the US tried to effectively back Russia into a corner militarily and economically by putting sanctions on them. Russia said, that's fine. If you don't want us to use the dollar, we won't use the dollar. We'll de-dollarize and we'll look for alternative export markets. We'll build relations with other nations. Now, the biggest or greatest amount of damage was then caused to Europe as a result of this. Now, China is doing the same thing. It will look for alternative import markets. So it went to Brazil and said, well, we'd like to buy soybeans from you. And Brazil said, fine, no problem. So it's self-defeating to think you can defeat China. The thing with China is that what they do extremely well, they're quite happy to sit this out for 50 years if necessary. It will never last 50 years or 50 months, but that's their philosophy. With regarding to dumping treasuries, they already have dumped huge amounts of treasuries. The tick report data is wholly inaccurate. I'm not saying they've dumped all of them. They've probably dumped at least half of them. And what have they been doing with all the treasuries they've dumped? They've been buying up assets all around the world.
Right, right.
Now, the question, of course, is, and this is the thing that is, well, okay, if they've been dumping all the treasuries, where have they gone? Well, they've been siloed into the US Treasury via the Exchange Stabilization Fund now. People will disagree with me and say this is conspiratorial nonsense. But it's factually correct that they have to go somewhere. We know from a lot of evidence that huge amounts of treasuries have been dumped. We know there's been nobody buying US foreign treasuries from foreign entities for around 4 or 5 years, probably back as 2014. So they have to go somewhere. And they're certainly not appearing anywhere obvious. So therefore, they're getting siloed away. And it's rather than the question of who's buying up all the US debt in the process. Now, okay, there's pension funds, etc. But in essence, to a large extent, the US Treasury is buying up its own debt because everyone else is rejecting the dollar. So, yeah, China, to some extent, is dumping treasuries. But the other thing is, whenever it gets dollars, it immediately effectively sells the dollars by buying gold or by buying assets.
Right.
So there's this big idea there's a dollar shortage in China. Well, what then people are not understanding is the dollar shortage is because China's de-dollarizing. It's dumping its treasuries, it's dumping all the dollars of forex reserves it's got and not holding them. Okay, I'm not saying it's dumped all of them, but it's buying up assets. It's forming trade relationships from Vladivostok in the east to Lisbon in the west, and north and south of that in Africa and the Middle East. And that's what its goal is. So it can sit there and say to the US, well, fine, if you want to impose tariffs on us. But they're doing import substitution. So they don't need to continue to import from the US to the extent it was anyway, which is why we're seeing a decline in exports from the US to China. The other thing is, and which I think the US finally sort of woke up to maybe literally a week ago, and something I discussed previously several months back, was China was actually sending its exports to Vietnam, who were rebadging them as not made in China but made in Vietnam, and then selling them to the US and incurring no tariffs. So there's a lot of that being going on, which the US wasn't aware of. But in essence, a lot of this whole trade war, the accusations against China of intellectual property theft and technology transfer, and the Huawei debacle, is really not about the fact that China is breaking all these rules and regulations and the US is aggrieved by it. It's because China is effectively leading a de-dollarization campaign that the whole world's adopting. It's encouraged its own nation as well as its own people and other nations to buy gold and dump US treasuries, get rid of fiat currency effectively, and to protect themselves and try and insulate themselves from what is coming. And this is really two empires, an empire that's dying a death effectively and is really in the intensive care unit from my perspective. And it's had a run. It's all nations eventually who have the world's reserve currency collapse. Britain had its 100 years and it collapsed. The US is probably not quite at 100 years, but that's on the verge of collapse. And there's a new paradigm developing, and it's going to be the Chinese, but not exclusively China. It's Russia, it's the Middle East, it'll be nations like Iran. It's a multipolar world. China will not have the world's reserve currency because it doesn't want the world's reserve currency. It just wants its currency internationalized. And there's a whole set of new sort of financial mechanisms of how that will come to fruition in terms of settling trade in bilateral terms, etc., which maybe we'll talk to or maybe we won't today. But essentially, China's looking to the future. So it will sit there and say to the US, well, if you're going to keep putting tariffs on us, we'll just likewise do the same. But they also have, well, yes, they could dump treasuries. Yes, there's various things they could do with regards to, and Huawei is a great example of this, where the US thought they could destroy the company. Little did they realize Huawei's already developed an operating system, which is now, they've sent out 1 million smartphones for production testing. It could be rolled out within a matter of 2 or 3 months. Yeah, there's some sort of things to sort of creases to iron out in it, but they've spent 5, 6, 7 years already developing it because they knew what was coming. China always looks, they have plans for 1 year, 5 year, 10 year, 50 year, 100-year plan, and they stick to it. So they're fully aware of what the consequences would be when eventually the dollar collapsed. And 2008 was the huge wake-up call for them because they realized, okay, you can smooth it over with QE, you can pretend that you've refloated the banks, but everybody knows the reality that it was only a stay of execution. Effectively, that's when the dollar was dead. Now you can keep trying to inflate it and create asset bubbles and convince everyone to the contrary, but everyone knows, in fact, that's such a nonsense in reality. And China's been preparing ever since by forming the BRICS, by forming the Belt and Road Initiative, by having bilateral trade and encouraging nations to trade in non-dollar terms. And Russia, of course, dumped all its treasuries.
Right.
And actually, de-dollarization was the best thing that's ever happened to the Russian economy because as a result of it, I mean, it's not out the woods, but it's a lot stronger than it was back in 2014, despite all the sanctions. But also, it has the most enormous asset reserves. 2/3 of its nation, it's not even began to exploit it for natural resources, despite all the huge resources it already has. And it's ripe to integrate into the Belt and Road via, Russia, but also the Eurasian Economic Union, which is going to sort of be a bolt on and form this Eurasian axis. So there's been big plans. That's why China and Russia have been purchasing huge amounts of gold, because they've had a plan in place pretty much since probably prior to the 2008 collapse, but certainly since the financial crisis. They've had plans and they're accelerating that, which is abandoning the dollar, abandoning the old world system, introducing a new paradigm of what I would call true globalization and true integration with nations, and that everyone just works as equals and develops win-win situations. And yes, there's going to be people who don't agree and say that China's exploiting nations, but why are all these nations signing up to trade deals with China? If that were true, they wouldn't do it. But the truth is they get loans at far lower interest rates than the IMF, the World Bank, and the usual suspects that have, from my perspective, raped and pillaged nations across the world for decades.
That's part one of our interview with London Paul. Some stunning information he released, although just wait until you hear part two, where we dig into the gold market and really how some of these things play out. So check back the Arcadia YouTube page soon and you will find it there.